We have seen a bit of a decline continue in case of the precious metal space there, but it's the energy space which has seen a ticker sharper hit there, 0.5% on the lower side onto that one as well. And the base metal prices, of course, started the Asian markets on slightly better note because you had the US data coming in on the positive, but the strength in US dollar is something that's capping too much of a gains there. So at this point in time, after the European markets have opened, you have seen a bit of a decline coming in for this space as well. Let's get in then Ashok Mittal, and he joins us live on the show with his strategies on all of those commodities. Ashok, hi, welcome. How would you want to look at the precious metal space? Because we haven't seen 1400 kind of sustain on the higher side in case of gold prices. In the Indian markets as well, how would you want to trade today?
Hi Manisha, I think despite of a bounce back happening from the low levels, we still expect that there will be pressure on entire precious metal space, because we do expect that there is no physical market demand currently, and we see international market also going down. So in case of gold, we think that $1,400 should remain a resistance. So we are advising to sell on any kind of upticks, maybe $1,375, $1,380, and so on. And then we expect gold to come to $1,350. And once that breaks, maybe $1,320, which is a very strong support level, which might hold for the time being. So I think we have a scope for gold silver prices going down further, and hence selling on rally is advisable. Similarly, I think silver also is advised to sell on upticks. For a long-term perspective, I think that 49,500, which was a long-term support, now becomes a resistance. But I think immediately, if you look at 45,000, should be a very good resistance, and we don't expect that to be broken. And we will expect prices going down 42,000 and lower. So I think similarly, if you see international markets, if you are below $22, then the fall may be higher in case of silver prices. So in case of both gold and silver, we expect that prices will remain under pressure, and you will recommend to sell on upticks. In India also, there is a lot of restriction in terms of now financing on gold and gold import. There is no marriage season, etc. So there will be pressure in terms of demand not being there, and as well as we have seen SPDR holdings lesser, so that investment demand is also now missing. So in lack of any trigger in terms of demand, I think the prices will remain under pressure. The only saving grace in terms of Indian prices might be the rupee factor, which might take price a little higher.
What's your sense really coming in for the energy space? You have the OPEC meeting which is coming on 31st of May. You also have the US crude inventories today expected in the evening. And then, of course, there has been positive data that we have seen come out of US in the markets yesterday. How are you reading into all of these fundamentals?
See, Manisha, I think from a very long-term perspective, which we have been discussing from time to time, our idea is that the range for NYMEX crude oil should be between $80 to $100. And right now we are on the upper band of the prices. Currently, our idea is that prices which has gone up is largely because of these geopolitical issues, and that is why there is some premium getting built in, and that momentum might continue for short term. So if you look at current prices, I think anything say close to $93, whether it's $92.50, $92.70, etc., should be support, and we might see prices going back to $96 or so. So in that case, you can see the current price momentum may continue. Similarly, on MCX, you might see that prices which are say close to 5,300, so maybe 5,250, 5,270 range can be support, and then we might see prices going back to on the higher side at 5,400 or so. So for a short period, you can buy on dips with a $0.50 stop loss. That means 25-50 rupees stop loss. And on the upside, the momentum can be around say $2, which means you can gain around 100 rupees. However, from long-term perspective, I think since the demand is not really coming up from US, and also overall expectation in terms of growth is lower, so we might expect prices in long-term to be continue to be bearish, because we don't expect much to happen in the FOMC meeting, and inventory levels will be as expected will be a little lower. So that time we might see some spikes coming in between. But I think the overall trend from long-term perspective remains on the downside. A good trade in crude oil is, which we can see, is between the difference between NYMEX crude oil and Brent crude oil, because this difference used to be around $18-20 sometime, and now it has reduced to around say $8-9. So our idea is that this difference should not go below say around $6 or so. So when you see this kind of trade happening, when the difference is say less than 500, say around 350-400 between these two in Indian markets, or say $6-7, then you can initiate this position of say buying Brent crude oil and selling NYMEX crude oil, and we will expect this difference going back to around say $15-16. That means the difference between NYMEX and Brent crude oil will increase, so you can actually play on that spread as well.
Let's get in then Anurag Kataria from ITI, and he joins us on the show with his strategies on all of those commodities. Anurag, hi, welcome. Let's start with gold first, and very choppy, 1400 continues to be a resistance. How are you trading it today?
As far as bullion is concerned, we are still maintaining our last week's view on the bullish positions. We would like to add a couple of positions at around 26,250 to 300 for a potential target of 26,550 to 600. On the COMEX front, we are facing some resistances around $14.15 to $14.20 kind of a zone. We think market may test because overnight markets have closed around $1,394. So we feel there is some space on the upside, which can be explored for 250 to 300 rupees kind of a range on MCX.
Sure. Anurag, to an agriculture commodity as well, and sugar prices have been making a lot of news in the international markets. We have come off those 1 week highs. In the Indian markets, though, there has been a continuous pressure because of high supplies, not too much buying, cost of production still on the higher side. How are you treating the prices with all of this?
On the agri front, we are looking at sugar. We continue to maintain our bearish view on sugar. There are certain monsoon expectations. Hopefully, if the monsoon comes in on the first week of June, we expect a good crop condition to be maintained on sugar front. Sugar, we are looking at a level of around 29.30 to 29.50 kind of a range. The selling point would be 3030 to 3045 with a stop loss of 3090.
Joining in on board, Amar Singh Deo from Aditya Birla Money right now, and here is his view on the commodity universe.
From a short-term perspective, from an intraday perspective, yes, one can look at buying gold on a dip at 26,250 levels with a stop loss below 26,100 levels, targeting 26,550 in the short term in the intraday. However, for the long term, gold trend definitely remains bearish. As far as copper is concerned, copper appears to be caught in a range on the domestic exchanges as well. So copper can be used as a buying opportunity around 408 levels with a stop loss below 404, targeting 415 approximately. For crude, buying could be initiated around 5300 levels with a stop loss below 5250, targeting 5400 levels. Major level for crude on the domestic exchanges would be around 5130, 5140. That's a major level. Below that, yes, we could see some sell-off happening in crude oil prices.